Hello, welcome to part 4 of 5 of the Mr. Fiscal web series. My name is Robert Poetta. I am a family medicine physician, and today we're going to be talking about risk management. The disclosures are the same as in previous presentations, and our disclaimers are the same as well. So what is risk management? Here we're talking about the prevention of income loss. Typically, this refers to some kind of insurance, and really our goal here is to protect your investment in yourself. A 2017 Medscape survey showed that at the time the survey was given, 33% of family physicians were still paying off their student loans. So you've invested a lot of time, a lot of money into your career, and we want to make sure that you're protecting that. So the key points that I want you all to get away from this series are to know the importance of and how to purchase an umbrella policy, describe the two types of life insurance and understand the pros and cons of each, understand the different uses of life insurance, understand the importance of proper individual long-term disability insurance, and we will describe what that means, and then briefly review some legal documents. This doesn't fall under the category of insurance, but can protect you and your family. So when you're looking to purchase an insurance policy, what you really want to think about is how am I balancing cost to risk? If the risk may lead to financial ruin, then chances are you need to be insured. So say, for example, you buy a new fancy flat screen TV that comes with a warranty. With your future salary, if the TV breaks, you probably won't be completely financially ruined by that. And so one could argue that you don't need that warranty. But there are certain kinds of insurance that you absolutely need to look into. This includes property insurance, life insurance, long-term disability insurance, professional liability insurance, medical insurance, and long-term care insurance. The last two we're not going to talk a lot about. Medical insurance, I think we all understand. We're all doctors. We all know that that's very important to have. And then long-term care is probably not something that is important at your stage of life. This refers to coverage in case you were to go into a nursing home, though you may want to think about this kind of insurance for your parents. So first we're going to talk about property insurance. This includes home and auto insurance. I think most of us understand that this is important to have. The key point here is that you need to have proper liability protection. For example, somewhere around $200,000 to $300,000. This is about the maximum that most insurance policies will allow. And this is to protect you in case you find yourself negligent or responsible for injury or damage to property. However, you could find yourself in a situation where you are found negligent and sued for even more than this. And that would be a bad situation. You could find yourself with your assets taken from you and even up to a third of your salary taken until it's paid back. And so what do you do to protect yourself from that situation? So that's where your umbrella policy would come into play. It helps fill that gap between your liability insurance policy and how much you could potentially be sued for. It's usually offered through your property insurance company. However, they won't approve you for it in most situations unless you're maxed out on your liability policy. What's nice though is that it is fairly cheap since it is seen as a catastrophic policy. The insurance company is unlikely to pay out, and so they don't charge much for it. It's purchased in increments of millions. So for example, $200 to $300 annually per million is a pretty typical example. So I would recommend that you get a quote and see what your company offers. Next, we're going to talk about life insurance. And you may be thinking to yourself, most of you are at a stage of life where you're in your 20s. Many of you may not have any dependents. And so you may be thinking that I don't really need to worry about this at this point of my life. I would argue the opposite. I would actually recommend that you go ahead and look into at least a life insurance policy. The reason for that is for something called medical underwriting. And what that means is you have to answer certain health questions. You may need a physical exam in order to be approved for the life insurance policy. And so it's probably best to go ahead and get it done now while you are young and healthy. That way you're a lot more likely to be approved than later in life. And chances are the policy is going to be cheaper now than later in life. So really you probably would save money in the long run. So there are two types of life insurance. There's term or temporary life insurance, and then there's whole life or permanent life insurance. Term life insurance usually lasts somewhere between 10 to 30 years, depending on the policy that you purchase. And what's nice about it is that it is fairly cheap. The insurance company sees this as not a when they'll have to pay out, but rather an if they'll have to pay out within that term period. Whole life insurance, however, is much more expensive. And the reason for that is the insurance company sees this as not an if they'll have to pay out, but rather when. Right now, at your stage in your career, you probably want to be looking at a term life insurance policy, since that is a whole lot cheaper. But what you really want to look at is a plan that you can convert from term to whole life insurance later on with no catch. So, and what I mean by that is you won't have to take a physical exam, you won't have to answer any health questions, you won't need any sort of approval. You'll just be able to switch the term to whole life later in life. Now, for the military residents, you want to try to find a plan with no war clause. And what that is if you were to pass away on foreign soil in a war situation, the insurance company wouldn't pay out for that. USAA is a insurance company that does not have a war clause. There may be others, and I would recommend that you do some research on this before you purchase a policy. So there are three different uses for life insurance. The first we've already talked about, and that's protection. If there's anyone financially reliant on you, then you should go ahead and get a life insurance policy. And as we said before, if you're young and healthy, go ahead and get one anyway. The second use for life insurance policy is for wealth accumulation. You can use your own money as an investment that may earn interest. And what's nice about it is protected from taxes. This is somewhat controversial because these policies tend to be very, very expensive. And so if you're thinking about doing this, I would look very closely at your financial income situation. Usually this is going to be for households that are making greater than $200,000. And usually this is when you're maxed out on other areas of income generation. If you're going to a financial advisor and they are really pushing this, especially while you're still in residency, I would think twice about that and maybe get a second opinion. The third use for life insurance is for business purposes. If you in the future are looking to buy into a practice, become a partner at that practice, the bank will require that you have some kind of life insurance policy. And the reason for that is a term called collateral assignment. Basically what that means is if you were to die while still owing money on that practice, the life insurance policy would help pay that debt to the bank. So now we're going to move on to long-term disability insurance. And this is actually really, really important. It is important to go ahead and get. It will protect the income that you have yet to earn. So if you purchase now in residency, I would recommend getting something cheaper that covers your current salary. And what I want you to look at is a company that will increase your coverage when you finish residency and earn a bigger salary. So there are three different types of long-term disability insurance. The first is an individual policy. That is a contract between you and the insurance company. You want to look for a policy that is non-cancelable and guaranteed renewable. The company cannot change the rates or alter the policy in any way. Usually this is the most comprehensive and robust in terms of benefits. Second is a group policy, and that is a contract between your employer and the insurance company. We're going to go through a whole host of reasons why this is not adequate by itself. One reason being that rates can change with a group policy. It's a nice supplement to individual policy, but not adequate by itself. Finally, there's the association policy, which is a contract between a medical association and the insurance company. For example, the AAFP may offer a long-term disability plan. It is similar to a group policy in that rates can change and be modified. And so again, it is good maybe to have, but it should be used as a supplement to an individual policy. Really, the key take-home point is you need to have an individual policy. So many, if not all of you, are going to have a long-term disability plan that is provided by your employer. But as we discussed before, this is not adequate. You're only going to meet basic expenses with this policy. So say, for example, you are disabled and you get 60% of the income that you would have received. That may sound actually fairly good, especially given the income that you're making now. However, that 60% can very quickly turn into somewhere between 30 and 40% after taxes. You're also going to find yourself at a different stage of life, and you're going to be used to a certain kind of lifestyle by that point, and so that amount of income probably isn't going to cut it. Also, this policy goes away when you're at age 65. So any chance of saving for retirement is pretty much out the window at this point. Also, these kinds of policies, group as well as association policies, have very restrictive provisions, meaning that their definition of disability is very narrow, and usually it means you're totally disabled. So it may very well be that you can't see patients anymore because of a disability, but you can do some other things. You can do lectures, administrative things. That may be a cut in your paycheck, but that's okay if your disability insurance policy is supplementing your income. However, in this kind of policy, the insurance company will not pay out because you're still able to do some work. And then finally, again, as we mentioned before, the coverage can be changed or canceled at any time. It also goes away when you change employers. So for all of these reasons, employer insurance, group insurance is not adequate. So to sum up here, some questions you want to ask when you're looking for a long-term individual disability insurance plan is, can the provisions or the price of the insurance change in the future? You want that answer to be no, as we discussed. You want to ask, how is disability defined in my policy? Total disability may mean different things to different insurance companies. You want to find a policy that will pay out, but would allow you to potentially do some other things related to your field. And then finally, you want to ask, what are the riders included? And policy riders are just enhancements that aid in protection during long-term disability. So we said before that you want to find a company now that will increase in benefits when you increase your income. And that's called a future increase option, and that is a type of rider. Another rider that may be important is recovery benefits for the full benefit period. What that means is while you're disabled, you will have a loss of patient base, and the insurance policy will cover for that. There are some others, and again, as you're researching, I would ask those questions and figure out what's going to work in your situation. So now we're going to move on to professional liability insurance. I'm not really going to talk a whole lot about this. Almost always it's going to be supplied by whatever group you're working for or whatever hospital system you're working for. Just so you know, premiums for this kind of insurance do vary state to state. For example, the Northeast in particular sees some of the highest malpractice payouts in the country, and therefore they have higher premiums. So if you want to go ahead and buy your own, or you need to buy your own, I would recommend finding an independent broker who can get you quotes from multiple different companies. Finally, we're going to talk about some legal documents that can protect you and your family. The first is a will, which is simply a written document that indicates how your property will be distributed when you die. It's a little bit different from a trust. A trust provides lifetime and after-death property management. You can appoint yourself as your own trustee, or you could appoint a living trustee in the case that you are disabled and you can no longer make decisions for yourself. A living trustee would then have the legal authority to manage your property. The expense, publicity, and inconvenience of a court-supervised distribution could then be avoided. Next is a power of attorney. We've heard this term before in the healthcare setting, a healthcare power of attorney. A power of attorney is someone that has the legal authority to act on your behalf. It can be general, they have total legal authority in all decisions, or it can be limited / specific. So as we mentioned before, a healthcare power of attorney, you can have a financial power of attorney, for example. Power of attorney documents can expire, and so it is based on state, so you want to look into that and how long this legal document will last. A living will is probably something else you've heard in the medical field, and this deals with goals of care, whether you want to be intubated, have feeding tubes, etc. Even though we sometimes use both terms interchangeably, living will actually falls under the category of an advance directive. This advance directives include a living will, but also include DNR forms, power of attorneys, organ donation, and some other things. It may be best to go ahead and start looking at some of these legal documents. You never know what's going to happen in the future, and it would be best to go ahead and protect yourself and your family. If the information discussed in this web series is becoming overwhelming or you're feeling very uncomfortable with it, there are lots of people out there that can help you. As mentioned in other series, financial planners can be very helpful. You can talk to your human resources person, which can help with disability and professional liability insurance questions, and attorneys can help you draw up legal documents. Here are some references / resources that were used to make this particular lecture. Thank you for listening. If you have any particular questions about this particular lecture, my email is down there at the bottom. Thank you.